So we got some key economic data out, as we can see here. Core PCE. Now remember, the PCE numbers are the favored inflation numbers by the Federal Reserve. So it's the one that they look at the most to determine whether or not to kind of raise rates or not. So right off the bat, the core number previous was 0.1. The forecast was 0.3%. We came in at 0.3%. So that one came in alignment. So no big deal there. The next one was the price index, so the PCE, meaning everything included. Previous was 0.4, forecast was 0.3. It came in a little bit hotter than expected, but only by 0.1%, so not overwhelmingly hot, just slightly. Core PCE year over year, 3.7, forecast was 3.7. PCE year over year, 3.4, so these came in exactly in alignment. The next one, this is the one that I think makes the difference, folks. And again, these are the next two numbers. So normally, the PCE data would be the most important. But in general, this came in alignment, right? For the most part, aside from just a slight miss on this one, these all came in. The personal spending. Now, this is people spending. So number one, it jumped pretty dramatically. Expectations were 0.5% increase in spending. It went to 0.7. That's a pretty big jump, in fact. Now, the kicker is this, guys, right? The kicker is this, is that is telling me something. It is telling me that people are being forced to still spend, or they still are willing to spend, but we know credit card debt is skyrocketing. We know defaults are increasing. So it's telling you that, to me, there's a consumer that is still willing to spend, but they're using debt. They're jumping on that credit card bandwagon to make this spending occur. The next one is the best one. This is the best, at least for the Federal Reserve. Personal income. Now, again, it's not necessarily the best for you and I. We want our income to go up, but expectations were 0.4%. It came in less. So income is starting to drop. Spending is actually going up. We're starting to get a disparity here. And this overall is not good for the economy. So again, for you and I and everyone out there, that's not good. The Federal Reserve is probably saying, oh, this is good because it will bring eventually down inflation. All right, so again, just to understand this number here, these two numbers, personal spending and personal income, those are the key ones for today for me. Those, again, are positive for risk assets because, again, it shows maybe the Federal Reserve won't have to continue to hike.